satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good. Billy Ray, feeling good, Lewis. We're going to take a look here at the E-mini S&P and also the E-mini Dow. I wanted to show you the fact that, how these things have been bouncing off of the 382 retracements, because we're at a really critical level here today, especially since we made that number in the Dow Jones Industrial Average. And I want to get that one up next, to show you, how it expands and where all these numbers have come from, over the last few days. Now, all I'm going to do now is I'm going to post a chart of the Dow Jones E-mini going back over the last 12 trading days. This will be a half-hour trading, I believe it's a half-hour chart, as I recall, and then it is. You'll notice here that we had the big move down here. There was your first 382 retracement, was right there, okay? This makes a higher high. There's your second one. Remember, it took 4 days for it to make that 382 retracement. And then you can see here we exploded to the upside, and there was the 1.618 expansion, and the ABCD measured to 32,000, I believe 572, and the high was 32,570. I mean, look how accurate that is. But look at the number of times, folks. There, and there. That's what we saw just in that other smaller time frame. But in the last 10 days, all of these have been operating off the 382 retracement. And now what we've done is we've completed this large ABCD here, which happens to be exactly at the 61% retracement of the high that we made back on September the 28th. To me, that would mean something, and I hope it does, but we'll take a look at it. Now, one other thing that I wanted to do here on the early morning show, and Jim Bartolione will be our guest at the break, but I wanted to show you a setup, a trade setup that we're looking at for today. And those of you that, do ABCDs, this is not going to be anything that you're not familiar with, because that's all it is. It's ABCD. But I have a young man here who's been under my tutelage here for about 5 or 6 months, and we were going over some of the things we were looking at today. And so what we were doing is we were watching the A, B, C, D. Now remember, this is a shorter term time frame chart. This is only 15 minutes, so only looking at 2 days. But you can see this is a very perfect A, B, C, D. Now the key to this is, you notice how on point C here, this is point C, look how it exploded out of here. Within 2 bars, it was already taken out, the old high and getting ready to run. That tells you you're going to most probably make a little bit higher high than the ABCD. And that number came in at 121.22. And that number has been, hold on just 1 second here. I want to get it up here. 122.15 was the number, 122.15. That's where the ABCD completed. And of course, the high was going to be at a little bit higher level, of course, and you'll be able to see this on the next chart, because all we were doing now, being a 15-minute chart, we were trying to square out price and time. In other words, get time to come in to us to try to see if what it's doing is what it's done before in the past, because that's all these markets ever do. So if you did this 15-minute chart and looked at it, and all I did now is I did the old Hurst thing. I measured from the low to the high. That was right here, and then I cloned it, and then I put it over right here, and that tells it should be making a high right in this area right here. And folks, it came on within 10 minutes of the exact high, and the market is broken already $500 from the high. So that tells you that that ABCD pattern is alive and well in Treasury bonds. Now, it could have easily gone blasting through the top and gone a lot higher, and that would what we call in trading a losing trade. And you got to get used to those, folks, because they happen all the time. There's no question about it. They happen all the time, and you just can't stand in front of it. Okay, now getting back to the S&P, I wanted to show you where we are in the S&P today, because very interesting here as we get the charts up to look at it. This is going back over the last few days because it's a shorter term chart to pay attention to. But as you're watching it here, you'll be able to see that when we're seeing it, you're watching it as a 15-minute chart. And as you watch it unfold, you can see I'll mark these in so you'll be able to see them. There's your first 382 retracement. There's your second. There's your third. And then remember, today, you see, we made the high yesterday in the S&P, which was right here. But the Treasury, the Dow Jones Industrial Average went 450 points higher, mainly because of 3 stocks. And now, here's where the major support is. From the big low we made down here, the 382 on this comes in here at 37.97. I think the low so far has been 38.25. So watch 3,800, 37.97, because that's a 382. And if we start breaking that, that'll be the first time it's broken that sequence in the last 5 trading days, a la maybe a trend change is imminent. So that's the real key to look at today, is 37.97 in the E-mini S&P, because if it breaks that, that's telling you that there's something different happening, because it hadn't done that in the last 5 days. And the fact that we made the 61% retracement on the Dow Jones, and the Dow Jones went 400 points higher than what the S&P did, and that's mainly because of one particular, or 2 or 3 different stocks. One of them was Caterpillar today, and I can't remember. It might have been Honeywell or somebody like that. I don't think it was Honeywell, because that was not it's not that high price. And in Dow stocks, of course, are price weighted and not cap weighted. The other thing about the importance of the Treasury notes and Treasury bonds, and I wanted to bring this up to you to show you, because we're in the midst of a 4-day rally. I'm going to switch over to the notes now, because it'll give you the same information that you're getting in the bonds as you get in the notes. There you can see the last rally that we had in the notes. Bada bing, bada boom. Folks, we almost hit it exactly spot on today in the notes. 111.31, I believe, was the number. I don't know what the high has been so far, but I know it was very, very close. The bonds did make it, but whether the notes made it or not, I'm not quite sure, but I will check during the break, and we'll make sure that we get this up here. So this is the way I try to set up a trade, for trying to find where the market should go to based on what it's done in the past, and all it's doing now is repeating. Now, this is what's really important, folks. If this is the really bottom down here, all we're going to do is we're going to get a little bit of a pullback, probably 382, and then zoom. We're going to have more short covering, and that means that interest rates for a short period of time, it might just be a couple of weeks, maybe through the election, I don't know, but that we could get a respite, because we've been down 17 weeks in a row. That is oversold, boys and girls. So it's going to take a while to get that thing corrected. So look to be a buyer on this puppy when she backs off, because we got more to go. 877-927-6648.
Teddy Kegstad has just announced a live webinar coming up for subscribers to his newsletter, The Tiger Forex Report. Wednesday, October 26th at 4 p.m. Eastern Time, Teddy will be hosting a live 60-minute webinar, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report newsletter. In this 60-minute webinar, Teddy will be discussing a full breakdown of the markets that influence currency pairs, as well as applying those variables to individual currency pairs, how to evaluate trading scenarios for risk versus reward, as well as a live question and answer session. Sign up now and gain instant access to this live webinar coming up, as well as a month subscription to Teddy's Tiger Forex Report, which comes with a 30-day money-back guarantee, so you have nothing to risk. Don't miss out on this live webinar event with Teddy Kegstad, Wednesday, October 26th. Sign up now for the Tiger Forex Report at the front page of TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks. I posted a chart of the euro, and you notice here that we're looking at a very distinct ABCD pattern up here. Oh, dear. I've missed the euro again. Hold on a second. It'll only take me a second to get it up here. And I pressed the wrong button here, the wrong button there, and pretty soon it's everywhere except where it should be. Okay, here's what we're looking at. This is a 60-minute chart. We make the 61% retracement. We come down. We make the 78% level. I hope it's coming through now, Al. Let's double check it again. Did the chart come through? Broadsword to Danny Boy, broadsword to Danny Boy, and the chart is through. The reason why I want to show you what's happening here is because you'll notice here in the time sequence from A to B, then the market comes down right to the 78% level and then goes up. But look at the time that it takes for the market from go to A to B and C to D. Now this is an ABCD, but it's not perfect in time and price. If this were perfect in time, the high would have been right in here somewhere, but it kept going to the right. So that's all you're doing is you've got to rely, when you get to point D is where you've got to act, folks, because you don't know the time part. The time is the most elusive of all the things we do here. You know, W.D. Gann said, you know, the time is more important than price, and I have to agree with that, but time is elusive. The only thing that I have is the ABCD pattern, and it serves me pretty well. And I add to that a 1.27 or a 1.618 retracement or expansion in this case. That gets me, you know, right up to this level right here. We backed off $1,000 in the euro. Now, how much is it going to come down as far as this one? No one knows that. But the first thing you'd want to be watching is where was the 382 on this? You know, so you want to see if it's all it's going to do is make a 382, and maybe it's going to be charging higher. You know, we don't know that. These patterns are predictable within nature, but my God, they are far from. Hold on, there's a scam. Oh my goodness, here, doggone, that's somebody I got to talk to. Somebody. Oh shucks, I can't get the darn thing to open. Doggone it. Just a second here. I gotta hold on just a second. Billy Ray, hey, I'm doing a radio show. Let me call you after it's over in about an hour, for 45 minutes, okay? Okay, Doc. Yeah, thank you, buddy. Good hearing from you. Bye-bye. That was the second student I ever had, folks. Jimmy Elder down in Birmingham, Alabama, and he had my private number, and that's why it's ringing. Sorry for interrupting, but I needed to answer that. Okay, there's the ABCD. What I'm trying to say here, that AB equals CD, perfect in time and price, only happens about 60% of the time. The other 30 or 40, 50% is it's going to take longer to make the CD. Sometimes it'll be shorter, sometimes it'll be longer. So what you have to do is you have to add the two ratios together, A, B, C, D. Okay, then you have to look at the retracement levels. And my goodness, we've got someone very important from Martinez, California. Brent, how are you?
I'm doing fantastic, Larry. How are you?
Living the dream, baby, the best I can. God, it's been a long time since I've talked to you.
You're sounding great.
Yeah,
sounding great, Larry.
Yeah, still living the dream, my friend. You still there in Martinez, California?
Yes, I am.
Yeah, that's good. What can I help you with, buddy?
I was hoping you could bring up a weekly chart on Microsoft, because it looks to me like it's a fairly symmetrical drive to a bottom, but could you take a look at it and see what you think of it?
I'm going to do that right now, and it'll only take me just a sec. And you say it's on the weekly?
Yeah, weekly.
Okay, let's get her up here today. And by golly,
yesterday, I mean, it was down pretty hard, but we still haven't taken out that low of, I think it's around 220 on the daily.
Yeah, well, you've got a good eye. Let me get this up here. So you're absolutely correct. We are within a heartbeat of that 3-drive pattern. I'll get this in here and draw it in so everybody can see it, and then I'll post it. And if you're free this spring or something, come down and visit me. I'd like to see you again. Hold on. Here, yeah, this is perfect. This can't be any better. Let me put the cycle tool in with it so that we can see low to low and high to high real easily. And boy, it's there. It's just about ready to do it. Let me get this over here so we can see it. It's actually, boy, you know what you got to be careful of here is that it might have already made it, and this might be a situation where this thing could really. It makes new lows now. Brent, take a quick look at this, but you'll see here that we made the 3-drive pattern and we rallied up to the 382. You see that? You see how we rallied up to the 382?
But there's a little delay probably. So.
Yeah, well, yeah, for me it is, especially with stocks. But what we did is we had that 3-week rally and, started, really strong this week, and then it got hammered yesterday or whatever day it was. I think it was yesterday, wasn't it, that it got hit really bad?
With earnings, yeah.
Yeah, well, that high that we made was a 382. That means if we break down below that, that means it's a 3-drive pattern that has failed. And, oh, my goodness, that puts you're looking at about another 20% hickey on the downside in Microsoft. So be really careful there.
Yeah, I'm watching that low that you targeted there. So if it breaks that, it would definitely not be a good trade.
It should not break that low. It looks like right now we're about a 78% retracement of that 3-week rally, but it's got to stay in this area. Otherwise, breaking down below that would be a high translation to the left, and boy, that's not good. A perfect example of it, if you look at what happened, way back in March, we had a 3-week rally. And then look, it just totally collapsed. And this is what we just had. That was a 3-week rally, but only came to the 382. And that's not a good sign. So that's what I'd be paying attention to, my friend.
All right. I appreciate it very much, Larry.
Hey,
Looking
get down here and say hello again. Love to see you.
All right. Thank you very much, Larry. Take care.
You bet. Anytime, Brent. Always like talking to you. Okay, let's move on here. We've got a couple other ones here that I wanted to bring to your attention. We've already talked about the euro. Here was a chart here that was sent to us by one of our friends over in Hong Kong, and he was thanking me. This is from my book, Before the Trade What You See book. It's called Pattern Recognition with Fibonacci Numbers. It's basically the same book as my Trade What You See book. In fact, the Trade What You See book has a lot more stuff in it, but he keeps this picture on the desk. But what's interesting, folks, look at the price on the right. That's the S&P 500 trading at 700 and something. That's how old that book is. It's 30-some years old, and that's when we were trading at one point, and the S&P was $500 and not $50. That was for big boys only at that time. But he's showing the Gartley pattern, and that he's still using the same thing after all these years, and it sort of made me, I hope that chart popped up because it should have. Anyway, that's what he was looking at, and I thought you'd like to get a kick of that. It came right out of that book, and he keeps that picture on his desk. So you reach a few people, and that's the main thing that I try to do, get a few people to do this, and it tries to help them out. I hope that chart did post. Am I correct? I believe that it did. I want to make sure. If it didn't, I want to get it up here so that everybody gets to see it. It did pop up. And now we got a break coming up, and guess what? We're going to have at the break Jim Bartolione of Bart's Charts. Stay with us.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, folks, we're back, and I believe we have Jim Bartolione, number 50, from the Bart's Charts in the house. Bart, how are you doing?
I'm good, Larry. Can you hear me okay and see my wonderful face?
It's just like you were sitting in the front of the cockpit and old Goose is right behind you, pal. You can be Maverick and I'll be Goose for the next 25 minutes.
I was Goose. I don't think I'd trust myself being Maverick. But my partner over at Top Gun Options was Buckley. He was a Maverick. So he might he might take you up on it. But yeah, anyway, Larry, it's all good. How are you?
I'm good. The first chart,
awesome.
XLE.
Yes. So look at
energy
that topic,
ETF.
huh? Yeah, the energy ETF. I mean, if stocks are going to start back down, I don't see energy continuing this run, right? But so we'll see, right? But that's a beautiful Gartley right there, right?
It certainly is. And then the next chart you have is the monthly chart. Let's get that up so the folks can take a look at it, because
so if we
this
fail,
thing, if it fails, you can see we could have a long way to go to the upside. That's for sure.
Absolutely, right? New highs. And, I stick that 1618 up there. I actually got it down here on the secondary little high right here. But yeah, it sure looks like it wants to too, doesn't it? Yeah, like you taught me, don't step in front of a big train. So we got to keep an eye on the energy sector, obviously, and this is telling us everything we need to know. Fails here, it's on a run, and if it doesn't, then look out below. So we're having fun, Larry.
Well, listen, we got a question for one of our listeners. Do you ever get involved in because you were in the Navy and you've been to war and all that stuff? Do you ever get involved in the political things of what's happening in the environment and whether nuclear war is a possibility and stuff like that? Does that ever come across your desk?
I talked to some people, but I don't really conject on what's going on. I don't think it's good, and we've had some private conversations, obviously, but I try to keep out of that. But I can tell you, it's not good. It's not looking good for sure. I wish the peace drums were beating. It certainly doesn't seem that way.
No, it's not good anywhere. You even looking at Iran, these women are out there getting killed every day just so that they can drive a car or not wear a scarf.
And think of the courage of those women, right? They know they're getting whacked. It's incredible.
Right.
But sorry, I can't be more concise.
No, that's good. Hey, the person asked a question, that's your answer. That's all you can do,
So if you look here at the bottom left, you see this dinosaur. I just kind of like being this dinosaur over here to the bottom left and just put my head in the sand. So Larry, look at this chart. So I don't know have you ever looked at TradingView software?
TradingView is a fabulous. In fact, it's the number one charting thing that people use in the world today. That's how big it is. It's number one.
This young man, Patrick Dunawall, a great guy, does the chart report. He turned me onto it, and I've started messing with it. What I really like about it is their long-term data. Yeah,
it's got all the ratios, patterns, and long-term data, short-term data. Yeah, it's got everything.
And it's cheap. It's cheap too. So anyway. I was messing around with interest rates, and I saw, and I think this is line on close or just line, but here's interest rates since 1913. Isn't that incredible? Yeah. And so the green line is simply, like you taught me, measured moves. That's all it is. And there's the measured move, right where we stopped, a couple days ago. So we just got to keep an eye on these, right? But this next chart, I really think it's going to blow us away. And so as I've been long TBT since the low teens, and I'm still long it. But it's obviously getting pretty overbought, and I'm like, okay, and the bonds are getting slaughtered, and they're getting really oversold. So I'm like, all right, we're going to get an inflection point here soon. So I go and I look at the long-term data, and I just go, all right, let me look at the measured moves. And so I'll look at both, regular charting and then also logarithmic. So I look at logarithmic and I look left, I look right, and I'm like, holy smokes, that's the same measured move. So from 1941 to 1981, 40 years, right? We just completed that same percentage move in interest rates in less than 2 years.
Yeah, a lot less than 2 years.
I mean, just let that sink in. And people are like, the Fed this, the Fed that, all the smart fundamentalists, right? I don't know. All I know is, holy smokes. And I try to do Elliott wave. I tell people it's like my golf score. If you see me start to go like a subwave of a subwave or like pointing as I count, I'm lying. I don't know what I'm talking about, right? Yeah, give me a 5. Should have been an 8, right? So that's kind of me with Elliott. But if I'm correct in this count, we're not even completing like the first wave in interest rates.
I know.
Right?
Well,
it's unconceivable.
It makes you wonder, doesn't it?
Yeah, it does. So here is a chart showing less than 2 years, a 701% increase. It took, last time we did this much, it took 40.
Yeah.
Question? We are screwed. Anyway, but let's keep having fun. So as we look for an inflection in the market, Larry, I always look at the junk bonds, right?
Okay, let me get that up here so the folks can take a quick look at that too.
You can see it?
I don't follow these much at all. Let's put it that way. So
I don't.
There we go. Junk bonds right in there. There you go. Is this the HYG? Is this what this is?
No, this is just the JNK. It's not the high.
Okay. Got it. All right.
ETF for junk bonds. And so I don't really trade it. I don't think it's liquid enough, but it's very telling, right? Risk on, junk bonds up. Risk off, junk bonds down, right? So look at this pattern we have. We're coming right up to it, right? So if, the big if, we never know, like you taught me and Mr. Douglas, right? If 90 to 91 bucks is going to hold the junk bonds, then we should be looking for an inflection point in the stock to start back down again. So this is a very important pattern, obviously, as you can see. And we got, what, 1, 2, 3, 4, 5 ratios and an ABCD in that area. Should be resistance. If it's not, okay, I got to go Control-Alt-Delete, right, and really take a look at this one. So for all your listeners, keep an eye on the junk bonds. And then the VIX just pounced on a really important level, right? And again, we got 1, 2, 3, 4, 5. That orange is a 127 ABCD. So we got about 6 ratios here for the VIX. Should, operative word should, be important support. So junk bonds goes up, bangs in that level, starts selling off. VIX finds support on 5 or 6 different ratios. Man, we could be, starting back down again. We'll see, right? I got another chart here for you, Larry.
Hey, you got a pretty good handle on this, Bubba. I'm really proud of you.
Taking a long time.
Hey, I was thinking of you today when I knew you were coming on when we were in Flushing, New York. Remember about 5 years ago when we were meeting with that Chinese group of people?
That's a lot of zeros.
Yeah, there was a lot of zeros. We were looking at a $3 billion account, and they ended up giving it to old Mr. Bernard Madoff. And
did they really?
Yeah, no, they did. They got back about 60% of the money, but that's what they did do.
So
that was a lot of zeros, 12 zeros. I'd never seen an account that big myself, but it was.
Larry, that was truly $1 billion lunch.
Yes, it was $1 billion, and they paid. That was the best part of it,
Well,
okay. So you think the VIX has got hey, we're going to have to pay a few bills here.
Yeah, we'll want to, because next chart's going to blow people away. All right.
Yeah, stay with us, and we will be, I think I've got a few seconds left, but there we go. We'll be right back. Oh, we got 1 minute to the break. Let me get it up here so we can get ready, and then we'll be able to see it. And hold on 1 second. Oh, this is a dollar index. They're going to like this. We're going to post a chart and begin to discuss it, but what we'll do is we'll wait till the cows come home and pay these past few bills here in about 10 seconds, and we'll have you on in 2 minutes. Okay, Bart?
No worries, Larry. Cheers.
Stay with us. Yeah, stay with us. We'll be right back. Bart DeLeone is on the line.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks, with Jim Bartolioni, Bart's Charts, and we're looking at the U.S. dollar index hourly. What are you seeing, Jim?
Yeah, Larry, our typical ABCD, but with some time, right? So I was really eyeing that 109 down there, and it just hadn't gone down there. So it's all the dollar right now, especially with the equities, right? So with dollar strength, the equities are selling off. And if we take a look at this tear that the dollar's been on, don't quote me on it, but I think this is really like our really first good, if you will, ABCD that we can buy into.
It flat out is. Don't think there's any question about that. That's for sure.
So, and like you talked, go ahead. Sorry.
No, the next one we want to take a look at is, of course, the dollar versus the Japanese yen, and that's been a one-way carrigan for quite a while.
Yeah, this was a beauty, and so. We got to get long the dollar versus the yen, right? They're capping, the Bank of Japan's capping it at 0.25. We're raising interest rates. I mean, this is a rocket ship, and I think it will go higher. But where did it stop? ABCD. I mean, it's unreal, right? Boom, right there. And then you can see we have some different measured moves. So I was looking in and around that level to be a. No, I'm not selling it. I'm not going to sell this thing. But I'm looking to try to get long the dollar, and it just hadn't been a good entry for me. So this is a big one. But I mean, look at that math.
Yeah, but the math is the one on the next one, baby. This has got everything on it. This mother god and country. Hello, operator. Send me the cell signal.
Well, that's what I'm trying, right? So the light blue areas are areas that I'm seeing are the potential sell signals. Potential, right? We haven't completed the ABCD. That's the blue, ABCD that you can see. And so what I started trying to do is really look at timing. And because, I really think that this is that we completed the first wave down of 5 more waves to come, right? So we have a 3, correct 4, and then a 5, and then we'll really get a clue of where we are. So that move took 8.3 weeks to go down from the middle of August into the middle of October. What I found fascinating was it was exactly 830 points. So you move the decimal point. So this low down here at the parentheses 5 and a 1 was an exact price and time equivalence, right? 830 points down, 8.3 weeks. But when you look at the moon, you can do some great timing, as you've taught me and you've shown me. And one of the things is the moon takes 656 hours to rotate 360 degrees. Right? It also takes 710 hours to get to the same place that, let's say, you were when it started that rotation. Why? Because the Earth's moving also. So you can use 656 and 710 hours as potential timing points. And so you can see from that high, when we hit the 2 or the B, I'm not sure if we're in a massive bear market or not. Who the hell knows, right? But I definitely think we've got some more waves down. 656 hours after that top, it nailed the 2. Right? Parentheses 2. And then we started back down. From that parentheses 2, 710 hours later, it nailed the low. down there at the parentheses 5 and 1. So I'll show you where I'm at with kind of looking at these timing components for the moon, but I'm just not there yet. So that's why I didn't put it on there, because we could have topped this morning. I don't know, right? I would like it to go up a little bit higher, mostly because it formed proportion and balance, right? 8.3 weeks down, 0.382 times that's what, 2 weeks, 2.4 weeks or so. Yeah. So I would just like it to balance time a little bit more, right? But it doesn't have to. So I'm looking to try to short this market again, Larry. And there's multiple things that are telling us that could have been it, but I'd really like it to pop up to that 4,000 level. And I just don't know if it's time yet. That's all. So then
nobody else does either.
Well, you never know, right? The red arrows are the measured move corrections, right? And you can see that all the way down, they've been running this thing, right? And we finished that this morning. And then on the way up, you can see to the left, you can see those blue measured moves. It's harmonic, right? Every single move was the same. So at first, this looks like a lot going on. But if you just step through it, you can see what's going on. And I'm trying to position it for short. So that's where we're at. That's
good. Hey, listen, thank you for being with us today, buddy. We're going to have you on in a couple of weeks, okay?
Yeah, let's see how these did.
Hey, listen, I watch them, and you're doing pretty good. As soon as you're wrong, you'll never be on again. So keep going. As long as you're running the drum machine, keep the drums playing, pal.
Hey, one last question for you, Larry.
Sure.
So you said when the cow's coming in, it made me think like with Beyond Meat, like there's no more meat, meat, like real. What do they do now? What comes in? You can't say when the cows come in.
Oh, yes, there is.
What?
Soylent Green. Soylent Green. Don't you remember that movie where they ground up the human beings and made them into hamburger with Charlton Heston? That was before your time, but that's what it was. That. Well, you don't want to watch it. You'll never eat hamburger again.
Larry, I love you, man. Be good.
See you later, Bart. You bet.
Cheers. Thanks, Larry.
Yeah, bye-bye. I have to tell you a story, folks. The four guys, there was Bart was my first one, and then Bucky, and then Jeff, and then Rooster or John. He was the leader of the Top Gun group, but Bucky was the second one, and he was in Florida, and he was trading foreign currencies and doing really well. He'd retired from the Navy, and he gets a phone call from a Middle Eastern country, very famous Middle Eastern country, and they wanted him to go there in the Middle East and to teach their Air Force pilots how to fly F-18s. And so it was a terrific job offer. It was like $400,000 a year plus all expenses. And his wife said, you think I'm going back to that godforsaken place? I will never do it. And he finally talked her into going for 6 months trial. And so they get back, and she gets to this house, and she has a mansion. She has 2 little kids, and they have a private tutor in several different languages. She has her own cook. She has her own maid. She has her own chauffeur, and anytime she wants to shop, she has the private plane taking her any place in Europe, wherever she wants to go, whether it's Switzerland or Monte Carlo. She had that plane available to her, okay? Well, after 2 years of that, she said, there's no way I'm coming home, and they're still there. He's been there 15 years, is still teaching them, and she's still doing the same thing. The kids are now in college, but she loves it. Her parents are over there living, and so it's really, she turned into something that looked like it was going to be crazy that turned out to be pretty good. So be careful what you ask for, folks. You just might get it. Remember, when God closes a door, he opens a window. Always remember that. We're going to have to take a little break here. I don't know how much time we have coming up to the break. And when we get back, we want to review where these markets are and see whether we are in the midst of a tiny bit of a correction today or not. That's what we're going to find out. So let's be careful here. And I don't know why my clock is on the wall is not running very well, but I've got 58 seconds left. If you have any questions, folks, it's 877-927-6648. Remember, my guest tomorrow will be Stan Harley of the Harley Stock Market Letter, and we'll have Kevin Murphy. If you remember, Kevin was into geometric progressions and stuff from 5 or 6 years ago. He's got some things he wanted to share with us. He was a friend of John Balsam of, I can't remember what it was. Hey, we'll be right back. 877-927-6648.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, we're back, folks, and we have a caller from Palm Harbor, Florida. Jim, are you there?
Yes, I am, Larry. I know we only have a couple minutes. I wanted to ask you to redraw the fibs on the T-bonds over the last 7 days, because the old high from a week ago was 122.06, and we broke through that, the last couple hours. Now we've gone back underneath that 122.06. So do you run your fibs from the 117.19 on Monday all the way to the 122.06?
No, actually, I'll show you exactly what I do here, pal, because I posted it and I want to bring it up. Oops, that's notes. I want to do bonds, so just give me a second. I did them both.
And while you're doing that, I just want to tell you this was such a phenomenal show today, because the way you stepped everybody through the first 5-10 minutes was phenomenal. Just to see the charts and watch you draw, and it was a great show, and your guest was phenomenal.
And Jim, I'll send you the $20 as soon as the show is over. Okay, it'll take you a while to get it, but what I'm going to do here is point the picture of what I'm watching. I keep it really simple, and all I'm doing is I'm doing the same thing you did, and all I'm saying is the last rally we had was 5 days. You can see it. That was about 2.5 weeks ago, and we're having another 5-day rally right now. We're almost there in the notes. We missed it by about 4 or 5 pips so far. The Treasury bonds made it. They got right up there to that level. and at 120, just the number you were talking about. And so we should start down again, and that's going to be the important one, because if we don't make new lows on this one, that means we're getting ready to have a really big drop in it. Well, it'll be a drop in interest rates. Whether it'll be a big one or not, I don't know. But if we fail, oh my goodness, we'll be looking at interest rates that could go 7-8% without even backing off, and that's a scary scenario in my opinion.
Yes, it is.
Hey, thanks for joining us, buddy.
For what you do.
I appreciate it. Thank you for calling in. See you later, Jim. Yeah, bye-bye.